Give me the pros first for central banking getting into cryptocurrency of some kind.
At one level, it's going to mean that central banks remain in the game. If you look at certain economies like Sweden, where the use of cash is very fast disappearing, central banks may have very little role to play both in terms of wholesale as well as retail payment systems. So this would keep central banks in the business of creating money, although most money in modern economies is really created by commercial rather than central banks. In addition, having a central bank digital currency would put a crimp on illegal activity that is intermediated to cash, bring a lot more activities into the tax net, and it would also make monetary policy at one level somewhat easier to implement. If we all had deposit accounts with the Federal Reserve, which would be one way of having electronic money, the Fed would be able to impose negative nominal interest rates, which it couldn't do during the financial crisis. So there is a lot to be said for having a central bank digital currency, although, as you're suggesting, there are some negatives as well.
Yeah, let's get to the negatives. So outline what the risks, some of them are obvious, but outline what some of the risks.
So one of the issues is that I could no longer buy you a cup of coffee without either a private agent or the government knowing about it. And there is certainly a question about whether we should have at least some privacy in our financial dealings without the government, without private parties being able to see them. There is also the potential for some degree of instability. If you do have central banks issuing currencies, it could take commercial banks out of the game in terms of retail payments, and commercial banks are still very important in terms of modern financial systems. So it could create some degree of instability, and we still don't know how it's going to work if you were to have a digital currency, how that would work in terms of the transmission and indeed implementation of monetary policy. It's easy to think about how it would all work much more efficiently, but there are potential bottlenecks that could be created. Then, of course, there is a big risk of hacking. Right. We've seen even very secure systems come to be vulnerable to hacking, and the same could be true of central bank digital currency.
What area of the world where we might see this first explosion of central banks really using this in some kind of capacity?
Now, here is the interesting thing. The big advanced economy central banks of the Eurozone, the Bank of Japan, the Fed, all seem to be taking a somewhat step back approach to this. But it's small advanced economies such as Sweden, for instance, Singapore, and many emerging market economies, including China, but also India, that are taking a serious look at this. In the small advanced economies, it's essentially because the central banks want to remain part of the game and make sure that they have control over the financial system. In the emerging market economies, there are many big advantages because the financial system right now does not work very well. Financial inclusion is an important criterion, and digital currencies intermediated through mobile technologies could work quite effectively.
But the issue with that was that do those kind of countries have the monetary policy and governmental support to then handle the issues that might come with using a cryptocurrency and monetary policy?
So in a country like Sweden, the answer is probably yes. Sweden is very far ahead of most other countries in its thinking, and that's partly because the use of cash has almost ended there. Right now, the share of currency, banknotes and coins in the overall M2 monetary aggregate is down to about 2 to 3%, and it's very fast vanishing. Sweden can manage it. It's a legitimate question whether China, for instance, has the technical infrastructure and also the sort of government institutions that are necessary to support a central bank digital currency. But they certainly don't want to be left behind, and all of these countries are moving forward to see if they can harness this technology in a way that would benefit them and their citizens.
I'm glad you brought up China, because I can't talk to you without asking about China-U.S. trade relations. The APEC summit over the weekend that ended in real tense words between President Xi and Vice President Michael Pence. What was your biggest takeaway? Where does this leave us into the G20?
There is clearly positioning by both sides ahead of the G20 summit, where it is anticipated that Donald Trump and Xi Jinping will have a meeting on the sidelines. It's clear that the U.S. is hardening its position. In fact, I see some of the statements made by Michael Pence is essentially channeling the trade hawks in the Trump administration here, who don't want to give an inch to China. At the same time, I think China is getting increasingly concerned about being cornered by the U.S. There was this notion that the U.S. should bring other countries onto its side, other trading partners of China who share similar concerns about China's economic and trading practices. And I think the very strident Chinese reaction to what might have been somewhat innocuous statements in the final communique, which they blocked, might be indications that they're getting a little nervous that the U.S. is getting other countries onto its side. So it's clearly a hardening of positions on both sides.